And good afternoon. Welcome into Market Talk for this Monday, January 24th. Great to have you with us once again. I'm your host, Jesse Allen. Thank you for joining us, making us part of your day. Find us online. MarketTalkAg.com is our home on the web, MarketTalkAg.com. Find all of our social media links there, all of our streaming sources, the latest news of agriculture, market information, much more, all online at MarketTalkAg.com. Well, we have a lot to discuss in the market trade. Really, not much different than some of the factors we saw last week, but we generally have a risk off day in the markets today. Let's talk about all of it. Let's say good afternoon to our good friend John Heinberg with Total Farm Marketing. John, great to have you back on here as we kick off a new week and a lot of pressure in these markets, a lot of risk off trade, as I mentioned. Wheat markets were higher today, but tie a lot of that probably to the Russia-Ukraine tensions. We got geopolitical worries everywhere. There's just a lot going on, and really, it was just felt like a money flow out kind of day.
Very much so. That was seemed to be the trigger on most things today in terms of where the money was moving to. And when you see a stock market pushing 1,000 points lower during the course of the day, and then we recovered off of that fairly nicely, but we'll see how the close goes here over the next hour or so. Then on top of that, crude oil came with it. It kind of fell apart today, a couple bucks down during the time frame. So you're seeing a lot of money kind of probably on the panic side. So they step out of things that they're winners in to help cover margin calls, or we just hit a capitulation day probably in that stock market, being down 7 consecutive days, hard washout, and you're just seeing people just kind of throw their hands up in the air and say, "Get me out." And so that could be some of what's going on here. I have to watch the close there. If we continue to firm up, that might spill over into the grain markets and the rest of the markets on the overnight session into tomorrow. But, obviously wheat was strong today. Again, dealing with the Ukraine, it pulled corn right back with it. And realistically, even brought beans 20 cents off the low. So wasn't a horrible close on the grain side of the equation, especially given where we were at the start of the day today. So we'll see, have to see what we get for Tuesday on our follow through.
Yeah, and you talk about that wheat market, and that's a great point you brought up. Is it really did it pulled corn higher, and it really did pull soybeans off the lows here today as well. And we think about all the geopolitical issues out there, Russia, Ukraine. I know there's some fighting between rebels in Yemen and the UAE, and both those weighing on crude oil today. You got China putting pressure on Taiwan, so there's just a lot of geopolitical issues out there, but it still remains, it seems, Russia, Ukraine center, front and center, because if something does erupt there, what's that going to do for trade out of the Black Sea region? And that's the big story.
Exactly. And that's been the strength underneath the wheat market, especially since we came off those lows and put a nice little rally together here. And as well as that's been talking the corn market, because that's kind of the two main grains that are going to come out of that hub is wheat and corn. So that's been some of the push that we've seen in the corn price here, even though it hasn't been as dramatic as the wheat prices in that regard, but still enough to support us and push us to multi-week highs here on last week's closes. So we'll have to obviously keep an eye on that. Obviously, we heard the news over the weekend. The United States told United States nationals as well as the embassy personnel to evacuate. Usually that's kind of a tip off. Something might be coming. We'll see. We're in a time window when you think about what's going on the calendar. Does Russia step into the Ukraine? We got the Olympics right around the corner. We got the Russian Chinese holiday right around the corner. It might be more of a standoff type move until maybe we get some of those types of events. We'll have to see where things go. But a lot of rhetoric, a lot of chatter between the two right now, and it just makes this market nervous and uncertain. And you got these end users out there that got caught on the short end of the stick last year, and they're not going to allow that to happen this year. So they're locking in those supplies the best they can, regardless of where those prices are.
Well, you think about locking in supplies the past couple of sessions, we've seen some sales on the books. China's been stepping in, buying soybeans, possibly buying the corn as well. I know we've had some unknown destinations come across the wire the last few sessions, but realistically, we're seeing some decent export sales here now the last couple of days. And I would have to think, some of that China tied to some of the ceremonial supposedly purchases they're making. But even then, soybeans, with some of the worries out of South America, maybe China saying, well, time to step in and buy some US soybeans and go from there.
They've got good crush margins again, so there's some ability to do that. There's also just a lot of talk that they're out in 2023 or November of 22, starting to pick up supplies. Even that sale today was split between old crop and new crop. There's just been a little bit of chatter there that they're looking at these longer term values and just want to make sure they're covering themselves. There's been a lot of strength in like these D's of 23 corn lately too as well. So kind of tells you maybe there's some value out there. And obviously focusing on what's going on in terms of the weather in South America, we continue to see those yield numbers come down. Obviously, we still got a long way to go before we get those finalized and where we're at. But if it's just making that end user a little bit nervous to bring some supplies in, they're going to secure those supplies, see where the price is, then they can make some adjustments on that price load later. But right now, again, they've been very, very active, at least stepping back into the market. Weekly export sales last week were pretty strong for beans, solid for corn. Shipments today, again, within expectation, but still good numbers, at least for this time of year when we're supposed to start slowing down a little bit. So that's been encouraging. That was one of the things the market is really kind of waiting to see is do we get a little bit longer tail on those Chinese demand pictures, going forward. We talk about somebody stepping into the corn market. Chinese corn's pushing about $11 a barrel equivalent here. $11 a bushel equivalent here. That's back to near record highs. And that was that window they stepped in and bought a lot of U.S. corn last year just to help cover those supplies.
Well, John, we think about where prices are at right now here after our close today. I mean, you got front month corn up above $6 now. You got some of those 22, those later deferred contracts, getting good value into the mid fives. Beans, even though down today, still hanging around 14. Wheat futures pushing back up there. With all this volatility, where I'm going with this, with all the volatility and everything in the markets, if I'm a producer, am I building in some protection here for downside risk and just see it if these markets can run higher?
If you're willing to hang on to the bushels, you think you got more upside potential, you definitely got to have something underneath because we're just one headline away from things possibly rolling over. What if tomorrow morning Russia says, you know what, we're not worried about the Ukraine and they back away? This wheat market's going to go down 50 cents. It'll take corn right with it. We'll see things tumble back very, very quickly. So you got to make sure you're at least looking at where your risk is at this time frame. If you want to move the bushels, pick up that cash sale at good price levels. March at 621 today, pretty solid level for corn. Wheat's back above the $8 barrier. If you missed out on that opportunity earlier, here it is again. But then make sure you're looking at those call strategies longer term. Again, there's still a lot of good value in this market. You don't have to spend a lot on those calls, but at least something to keep you in the game here for the next few weeks or so, just in case things do decide to break out. I love the way the corn closed today. It does kind of still give me an upside target, trying to target maybe that 640 window on March corn. So we still got some upside potential, but boy, it's hard to not pull a cash trigger on a sale here if we do continue to stay strong like we are.
Well, John, let's talk a little bit about the stock market and the Fed as well. The Fed's set to meet Tuesday and Wednesday. There's a lot of chatter that they're going to make some significant changes to monetary policy. What's that going to do? We saw the stock market, as you mentioned at the top, down sharply today, crude oil down with it, dollar rising. So, I mean, we think about what the Fed could or could not do here the next 2 days. And that seems to be something that really could shape our market trade here for the next foreseeable future, depending on what they do.
Agreed. That makes things a little bit more chaotic. We're seeing the volatility level move up a little bit higher, and that's bringing us some more selling pressure in as the market hates stability or lack of stability. Excuse me. One thing we really got to watch and a bit of a concern and to some of the market pundits and some of the people I've been kind of reading and listening to, does the Fed overcorrect and try to get inflation under control too fast that they push the car too far the other way? And that causes more instability. So there's a lot of concerns out there how we're going to handle the monetary policy. And that's why you've seen the equity markets drop the handfuls of days in a row, just because they don't want to be caught on the wrong side of this thing with good wins already on the table. If there is a mistake made and this market really decides to let loose. Now, technically, tough day today, big breakthrough, some pretty key support, opens the door up on that equity market to possibly even push lower. Down 7 consecutive days. Again, the close will be very key today. If we finish back down towards the lows at 3 o'clock when that closes up today, That's going to bring some more spillover selling pressure into the rest of the markets tomorrow, as just that overall tone is still just going to be extremely negative here in this window.
John, let's flip over to livestock. Cattle under significant pressure today. Pretty bearish cattle on feed report from Friday. Talk about what you saw with that cattle on feed report and how that translated into the downward pressure on the cattle markets today.
Well, obviously, it came in heavier than expected. You got total cattle on feed for January at 1% over last year, around 12 million head. And that's the second largest number that we've had since we started keeping records back to 1996 in terms of cattle on feed. Then you got that placement number at 6% over last year, again, well above the market expectations, and the largest December placement record on number in terms on record here, back again, going back to 96. So that definitely makes this market was very vulnerable to some form of a sell-off coming into the day. I expected to see that initial push that we had. Then when the stock market let loose, the technical side just kind of pushed down, and this cattle market just saw some pretty significant losses. Now, with that being said, again, we'll have to watch what the equity markets do tomorrow. We actually saw some pretty decent price movement at the end of the day. I'm looking at that April contract, went down to what we call the 100-day moving average. We haven't tested that since back to November. We bounced off that, finished, fairly nicely off the low, still down $2 on the day. So maybe we're at a spot where all of a sudden cattle became cheap. The supply side of the equation, still longer term, is still pretty tight. Maybe we overreacted a little bit with the sell off today. So tomorrow could be a pretty key day in terms of price movement for both lives and feeders, and see how things go, because the charts definitely did not have their best day today. We'll see if we get some more technical selling to the downside. But again, still might turn some of these contracts into a bit of a value given that cattle picture in the long term.
And I wonder as well, you see a correction like today, and we think about what could happen moving forward. One has to wonder if maybe a decent correction in the cattle markets would be healthy for the cattle markets longer term.
Very possibly, we've been on such a nice uptrend, especially in those longer term cattle contracts, third and fourth quarter next year. We've been basically rolling since October without much of a pullback. So that might open up the door for some movement there. But again, still liking that longer term uptrend that we're still seeing on these cattle markets, because again, we can't deny that the supply side of this equation is still going to be tight. Might take us a little longer to get there. And again, so I like third and fourth quarter on some type of weakness here. The problem with cattle on feed staying heavy in the front end would just continue to keep that narrative out there that slow slaughter pace keeps bigger cattle in behind us, keeps pressure on the cash market. That's still kind of been talked now for basically since the fall started, as we just can't seem to get much movement on the cash front as well as those front end cattle, without the exception of just a couple little pops here and there. So again, cautious a little bit maybe in the near term, given the closes today. Did like the way those back months traded as we got into the end of the day, even though we're still lower, we traded well off those session lows, and the market still does look supported as we get out into the end of 22.
Well, and on the other side, hogs today, I was happy with how hogs bounced off the lows, had a nice, decent day today. Really kind of separated itself from maybe that pork and bean trade a little bit. Beans were lower, hogs found some buying. I mean, I was thoroughly happy, I would say, with how hogs ended up today, John.
Yeah, solid day there in that hog market. Again, we got some really good money flow coming in. Let's start with those summer months. First off, $1.05 out there in June, dollar just short of that in July. New contract highs again today, even that triple digit gain in that June contract. That's reflective of this tight hog supply that's coming at us. And as that corn price continues to get firm, and we're putting some more flow into this money, or excuse me, into the summer hogs, just encourage producers to be there for that and make sure we got some animals to feed. Now we are still hearing some chatter again, just more rumors, but just talking to a few people, do we have some PRRS issues again? Are the pigs even going to be there, to fill these barns for the summer months? So that's something that came into play last year, and here we are again, possibly dealing with that. So this market might be adding some extra premium in that regard. Then on the front end, we still got that big premium to cash, which makes me nervous. But again, $8 jump at midday carcass values, up over the $100 barrier for pork carcasses. That's just some decent money flow. Now we're getting pretty overbought here, still holding a strong premium over that in cash index. So it makes me a little bit nervous that this might be a window this market could flip over quickly. So for producers, if you've got some good value, this might be a great put strategy window here for February or April hogs.
John, how about the dairy market? Any thoughts there on this Monday?
Dairy market's been on a bit of a slippery slope, maybe finding some support here around this 2050 window, 2045 window on February. Just don't like the trend I'm seeing in cheese trade. We're down under $1.80 on blocks today. Again, barrels softer as well. Butter had a pretty big drop down, 8 cents today. So we're seeing those product prices starting to come down. Maybe we're getting some supply back up. Maybe the chain's not moving where we need to. We do got milk production report coming out as well. So we'll have to see what the numbers are for December milk production. When that comes out, if that stays heavy, that can put some pressure on. We're at a spot, maybe this market can find a place to bounce again, but right now, at least the money seems to be moving to the sidelines. When you start doing that comparable $1.80 on the block price versus $2.20 on milk prices, just feels like milk's a little bit overvalued. So I'm a little bit still on the defensive here, at least going forward in the short term.
John, any other final thoughts you have for us here on this Monday as we take a look at the trade?
It's just going to be a couple crazy weeks, I think, until we figure out what's going on overall we didn't even touch on South American weather today, where that's going to be in this market. The biggest answers that this market needs: does the demand continue to stay fairly strong on the grain side of the equation? What's going to happen with these outside markets? That's just going to have a ripple effect through everything in general. Lately we've seen the money leave the equities and looks like it moved into the commodities. So maybe that flow kind of comes back. So we'll have to watch that. But at this time frame, again, make sure you're asking yourself on a daily basis, what's my biggest risk? What can I protect it with? Whether it's making a cash sale, locking in a floor of some form, picking up a put strategy, but just make sure you're not standing there holding the bag and it gets empty on you if the news all of a sudden quickly changes and this market decides to take this premium out.
Well, John, great advice as always. And I know if producers need a little help, they could reach out to you and the team there at Total Farm Marketing to get some of that advice, can't they?
Love chat with them anytime. Give me a call at 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And again, don't forget about our website, totalfarmmarketing.com. A lot of great information, webinars, free to producers. Just feel free to check out that information and sign up for something if there's something that interests you.
John, appreciate the time as always. Have a great rest of the week. We'll talk to you next week.
Sounds great. Have a good week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the Monday, January 24th edition of the show. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.